Good morning, my traders. Today I will show you how to read and use moving averages included into Voodoo support and resistance indicator. First of all, this green or sometimes red and orange line is 21 EMA, exponential moving average. This is the main moving average I'm using to enter my trades. The gray line is 33 simple moving average. This orange line is 200 exponential moving average, and this gray line below it, it's 200 simple moving averages. All of them, all the inputs for them, you can change in inputs of Voodoo support and resistance indicator. You can change not only their period, but also the type of the moving average to suit your needs. By default, those defaults which are included in the indicator are made to provide you 65% strike ratio and at least 2-to-1 risk-to-reward ratio per each trade. How to read those moving averages? First of all, whenever 21 exponential moving average is green, then it indicates potential long scenario for this strategy. And I have to say this strategy is best to be used in trending markets because as you can see, for consolidation periods, it's not much of a use, and you'd better stick to just horizontals included in the indicator. So whenever 21 EMA is green, it's potential long. Whenever it's red, it's potential short. Whenever it's orange, there is no trade zone, so there are no trades to be made to maintain good risk to reward ratio and good strike ratio. So whenever you see the price action touching them, when they are green on red, it's a potential long or short scenario. Then 200 EMA and SMA are really to be watched because they are a great indicator for a trend. So whenever 200 EMA is above 200 SMA, it's more bullish scenario, especially when the price action is above them. So they tend to provide good support and hard to be broken. Also, whenever the price action gets between those two, they tend to log the price action between them. I like to refer to them as a cloud, or like let's say a jelly cloud, which sticks the price action. As you can see, it glues them. So even if the price bounces off them, it likes to consolidate below or above them whenever they are in a proper posture, like here. So we have a bullish setup on them, but then price action is below them, so it tries to break them, but because they provide such a good resistance to the price action, finally it reverses and it goes down. So you may find those situations along the other assets too, and I can change to Bitcoin for a moment, and just to show you how it works. Right now you can see those two are in a more bullish scenario. So 200 simple moving average is below the 200 exponential moving average, but the price action is below them. So it tries to break them, but they provide such a good resistance zone that finally the price goes back, it's rejected. Also sometimes, and I'll show you a 12-hour chart, which is really good, and this situation here, whenever the price action enters them, so this is the price action was below them, they are in more bullish posture, but whenever the price action manages to cross the 200 SMA, it's being locked by them for a time. So it's good to play some support and resistance game. Most of the time it will mean the price action will try to consolidate. So as you can see on a Bitcoin, the price got between them, then it broke the resistance and we had a really nice price action. Other thing to watch about them is how they are sloping. If both of them are sloping up or down, that indicates a trend direction and probably a bigger trend forming. As you can see on Bitcoin, we had a really nice trade to be made. So those two are really to be watched, and they provide a really good support and resistance, and closing a trade on them many times is a really good idea, especially when you're not sure if the price action will go above it. Like here, if I was entering a trade here, I'd probably not enter here because they were too close to the price action, too close to 21 EMA, but then I got some new entries to be made and make money on them. Now those green dots indicate, and you can switch them on and off, green and orange dots here under entry SL levels. This is the risk management module in this indicator, and it's really important because it will help you make those trades. Whenever the price action, whenever you have 21 EMA being green and price action is above it and it touches those green dots, it will be your long entry. So those dots represent the entry level. Then you have orange dots, which are your stop loss. So whenever you enter a trade, and I'll show you here, when the price action touches those green dots, the 21 EMA is green, you enter a trade and place your stop loss on those dots. And then using your risk management, and probably what I suggest you should put the stop loss size here should be 2% of your wallet, the most. This is my rule which helps me trading, and it's really proficient because what happens next? When you enter here and the price action starts moving, then you move your stop loss along those orange dots all the way until you get stopped out. This strategy is made for you to have easy entry, easy risk management, and you don't need to think where you will be closing your position, because the only way to get out of the position is when you get stopped out. So this is a trailing stop strategy. So whenever you enter, you just move your stop loss along those dots until the price action touches it. So as you can see on this trade, if you're keeping 2% risk management rule, so the stop loss size should be, initial stop loss size should be 2%. This trade gave you around 7-to-1 risk to reward ratio, which means that you'd make on this trade 14% on your account, because you risk 2% and your risk to reward is 7. So 14% on a trade which lasted a week, actually, on hourly. It's really good, and it's really good because you didn't need to think about it. Only way when you get out of this trade, you get stopped out like here, and then you may have some new entries, but that's the trade to be made here. Also, those orange dots, their distance from the EMAs can be tweaked here using entry SL offset, and it's in pips. 1 pip is 10 points. So if you make it higher, it is less likely you will be stopped, but your risk to reward will shrink a little. It is good for assets to just test the history, how it behaved, and you can tweak it up. Normally it's around 3, but sometimes, like on some coins here, as you can see, I'm using the setting 7. But let's see how the 3 will go. You'll have even better trade, and 3 as a default. So it had around 8-to-1 risk to reward ratio on this particular trade. And we can see how the short will go. So here we have, and then on this trade, if you didn't enter here, entry on those dots would also, as you can see, give you like here a decent trade. So it will be 2.38 to 1, so it's still good. And also, whenever you have 21 EMA above 200 EMA and SMA, this is really good because it's and both of them are sloping up. This confirms the trend, at least for a while. And using trending strategy even on lower time frames, it's really profitable. So let's see how the short will go. Here we have 21 EMA being red, and this gives you a potential short entry here on those dots with the stop loss here. Of course, you'd get stopped here of your trade, so it's not the best risk to reward ratio. But also, what you have seen here, we were above 200 EMA and SMA, and they were still in bullish nature. So not taking this trade sometimes is better, and just to wait until they cross and they will provide a good resistance like here. So best trade to be made was here. You enter on green dots, you place your stop loss here, and then you let it run until you get stopped here on those dots, which gave you 6-to-1 risk to reward ratio. So this trade was worth 12% on your account, and took, because it's hourly chart, probably around a week, 4 days, 5 days actually. So it was a good trade to be made. So this is how you make trades using Voodoo, and you need to remember that this strategy is truly no-brainer. So you don't want to be overly thinking about it. You just want to place your trade, place your stop loss, and just check it every candle just to move your stop loss until you get stopped out. And this is the best what you can do with it. It's simple to use. It's color based, so you will know this is long entry, this is short entry, and only thing you need to decide if the price is consolidating or not. The best way to check it using EMAs is the distance between 200 EMA and SMA and the slope of those. So you can see here we get a nice short entry because the price action broke through them. They crossed to the bearish scenario. We had the red 21 EMA. They started sloping down. So entering a trade when they started sloping down, even here, here, or here, would be a really good trade, as you can see. And really satisfying trade, because my way of thinking is that whenever you enter a trade, you need to stop thinking of it. Unless you're making a trade managing it using the horizontals, as in the previous video. But this strategy is just something you enter and you have like 10-to-1 risk to reward, 11-to-1 risk to reward on this particular trade. So you don't need to plot your horizontals. I will be making next videos about how to use horizontals and EMAs with Confluence. But this strategy alone will give you plenty of money. You just need to watch what the market is doing. So whenever it's trending, it's good to use it. Whenever it's consolidating like here, it's better sometimes to forget about EMAs. Only watch 200 EMA and SMA as a support and resistance and see how the price action is treating them. Then whenever it starts trending again, you can catch such nice trades. I know most of you are trading Bitcoin, so I will show you some trades using Bitcoin. We'll be using hourly chart, and this is a recent trade which I actually made. So we had a bearish scenario, bearish 200 EMA and SMA setup, and we also had a 21 EMA flashing red. So entering the trade here, if you manage it, would give you an insane risk to reward ratio, because this trade would be stopped out only here. So this trade was 38 actually to 1. This was a really low risk. So if you are sizing your position according to your risk, you'd make on this trade around 80% on your wallet. Just moving your stop loss along those dots. Whenever those dots have a gap, you just leave your stop loss at the last level, and then when they show up again, you just move it to the new position. So your stop loss managing should be, let me get a line, should go like this. Your stop loss should go along those dots here, then you had few candles without it, then you moved your stop loss here, then here, then you left it, then here you moved your stop loss, and until you get stopped on this candle. So I think if you manage to use it, if you learn to use it proficiently, it will give you a lot of money. And this is the strategy I'm using most of the time. I'm using horizontals for ranging price action, but for trending price action, using this set of EMAs, it's really good money maker. In next video, I will show you how to build pyramids on it using this strategy. So how to squeeze of the price action more profit than it's giving you. This is a really good strategy and really efficient one. And I will also show you how to trade horizontals and EMAs with confluence to each other. I hope you enjoyed this video, and I hope it is useful for you. And see you in the next one. Trade safe.